Hi, my name is Angus Ho with Daddy Dad, a part of the Ash Management Group. I want to show how you can budget as a full-time engineer, make real estate investments, and live an exceptional family life as a dad. So come along with me in this journey of wealth. Over the 12 years that I have been in the stock market, I've made some serious mistakes and I've learned a lot about stock markets. In this video, I want to impart some wisdom on what I have learned in the stock market, how I like to invest, and what I do. By learning from this video, you can reach your dream goal faster, whether it be the dream house that you've always wanted, travel the world and explore new countries, or retire early and work on whatever hobby you want. Investing your money is a sure way to do things. Remember, investing your money is part of the ASH method of S for save. Now, stocks is the only one of those investing vehicles, and you need to know what you're doing before you continue. This video will only focus on stocks when it comes to saving. One of Warren Buffett's favorite saying is that be greedy when everyone is fearful, and be fearful when everyone is greedy. There are many strategies out there and with their varying learning curve. I want to talk to you about three of them that has worked for me because my time and energy is important and babysitting each stock is not necessarily a luxury I have. The three strategies are buy and hold, value investing, and day trading. Day trading during a time of crisis. The buy and hold strategy works best with stocks that you love. Think about a product you love. When I got Amazon Prime, I invested in Amazon. I have an iPhone, so I invested in Apple. Invest until you don't like that product and reinvest it into another product you love. The chances are, if you like the majority of the people, if you like the product, so will investors. With the buy and hold method, pick stocks that also have a dividend. This will allow you to make some extra money along the side while you're holding. Also, if the company isn't performing as good as you thought, in 3 to 4 years, you can sell it at no gain and still make some money on dividends. The next type of strategy is value investing. This type of investing is similar to buy and hold, but instead of buying stocks that is a fad, you're buying into companies that do important work, but no one really thinks about or investors has forgotten about. You'll obviously hear names that aren't going to be very popular, like semiconductors companies, mining type companies, and service companies. Warren Buffett's analogy is with Coca-Cola. If Coca-Cola opens a 10,000 square feet factory and expects 1 million cans of Coke to come out of that factory every year, and each can costs $1 to sell, then he can expect the company to make an income of $1 million. If Coca-Cola opens a 20,000 square feet factory, the company is supposed to make an income of $2 million. Now, without overcomplicating the idea, the stock price should reflect this income. This is where you get the price to earnings ratio. Now, each person can have a different PE ratio where they think it is a value company. For Warren Buffett, his number is 15. So if you go set up a screener for companies with a PE ratio of less than 15, then you will find all the value stocks. This is only the basis of value investing. The idea of buying value companies is that they are on discount. It could be that investors have forgotten about the company, and as earnings increase, no one is buying that company. Or that investors have ran to other opportunities that have a better return. Before I move on to the last strategy, I think those dislike pros are here. They're here, aren't they? Right behind me? Oh, they are here. Smash that like button. Hurry, smash. Okay, thanks. I think they're gone. So, like I was saying last talk about my last strategy. The last type of investing is day trading that I've tried. There are many books and videos on how to read market technicals to be a good day trader. However, I can't be like that. I'm an engineer. I don't have the time to day trade as a professional. What I've learned is that I can only day trade during a crisis. During a crisis, no matter what kind it is, markets will be volatile and companies will be cheap. Even the big names and the ones that are too big to fail will be cheap to get into. Take advantage of it now before it is too late. In times of crisis, it is about making the best decision now so that you can make more money later. Well, these are all my strategies that I have tried using. Just remember that I am an everyday dad, budgeting and working hard as an engineer to stay out of debt. One day I discovered the Ash method and strategically invested money into real estate and the stock market. Because of that, I now run a side company that manages over $3 million in assets. I want to go over some of my favorite stocks and why I chose it. My first one is Amazon. The PE ratio is 120 and it is not paying any dividends. Amazon is a rapidly growing company and has done amazing things. Why I picked Amazon is because I love buying things from Amazon. I recently ended my subscription with Amazon Prime, but before that, I loved the company and what it offers. The reason I ended Amazon Prime is because the subscription did not justify the amount of stuff I bought. This is also a reason why I probably won't be investing in Amazon and the initial excitement of it is over. However, I think Amazon is a great buy and hold company. The next company I want to go over is ExxonMobil, or XOM. The PE ratio is 28 and is paying a dividend yield of 7.94%. It is nearly a great value stock and it has a really good dividend. The dividend yield is just as good as the S&P 500. Why I love this industry is because we live in oil country, and as an engineer, I work in this industry. The evaluation of the company is good, dividend is good, and passion is strong. Therefore, I want to invest in this company. The last company I'm currently day trading is Carnival Cruise Lines, CCL. The PE ratio is negative right now because it reported a loss. The dividend yield was 14% until it got suspended. Why I still like to day trade this company is because it's on a discount. It's volatile and it is at its 52-week low. Because it swings 10% at a time, you can sell it high and buy it low. The other thing about this company is that even if you have to hold it for long, the dividend will resume and you can make some money back from it. The last thing with Carnival Cruise Lines is that it is one of the 4 biggest cruise line companies. It is simply too big to fail. The last thing I will say about investing in stocks is the rule of thumb I follow when investing in stocks. These are 3 rules I live by when investing. Rule number 1, don't be greedy. Sell the stock when you have made enough money. Rule number 2, be patient. Don't buy when it's high and don't sell when it's low. Patience can mean years. Rule number 3, don't lose your principal. Sell only and only if you are making a gain. With these rule of thumb, I can travel every year with my wife, live in a 2,000 square feet home. Now I'm a millionaire or 80% plus of the way there. If you have any questions about investing in stocks or want more ideas, join me at the Daddy Debt Facebook group to talk about your finance questions. Ask the YouTube community your questions by commenting below. If you like to hear more budgeting, engineering, or real estate tips, please leave a comment for what you want to hear, smash that like button, subscribe button, and be sure to hit that notification bell so you'll be the first to know when I post new videos every week on Sundays. From the Ash Management Group, this is Daddy Debt, saving you money.